Hello everyone, Monty here, market analyst at IG. It is a Monday morning here in Dubai. Got plenty to go through. We got the week ahead as well as a preview of non-farm payrolls this Friday. But usually as is the case, whenever you're watching something, you always want to know what happened previously. We're going to take a look at the markets very quickly. This is IG's trading platform, US Tech 100, Nasdaq 100, and this is a daily chart. Last Friday, strong move. Tech, communication, consumer discretionary outperforming as sectors, and that of course powering the tech-heavy Nasdaq 100 to an outperforming finish against both Dow and S&P, not just for the session, but also for the week. Now, a lot of that had to do, of course, thankfully, with a pullback when it comes to the U.S. 10-year Treasury yields back below the infamous 4% level. That's a plus in terms of because any increase in yields is really denting valuations of those growth and tech stocks. But let's go ahead and take a look at the week ahead. And with that in mind, of course, and this is this week's report released this morning. We do have the link in the video for those of you who want to check. But what we do have is we've got the Fed's Powell. He's going to be Chairman Powell. He's going to be testifying tomorrow and the day after. We did get a lot of central bank speak last Friday. I've written a summary in terms of the key members of what they said. He's going to be testifying Tuesday and Wednesday. But then afterwards, in the U.S., focus is going to shift towards the labor market because we've got ADP and job openings on Wednesday. We've got challenger job cuts and claims on Thursday, and then we've got the market impacting, or usually market impacting, non-farm payrolls on Friday, which we're going to have a preview very shortly. But globally, for those of you who are trading the Australian dollar, we've got the Reserve Bank of Australia's monetary policy announcement tomorrow morning. Expectations are we're going to see a rate hike, 25 basis point, taking their key rate to 3.6%. Those of you trading the Canadian dollar, you have to wait until Wednesday. Bank of Canada, they're going to keep it on hold at 4.5%. And those of you trading the yen, it's going to be jumpy every day pretty much because you've got traders pushing in the Japanese government bond market, pushing the yield on the 10-year. They're continuing to test that upper 50 basis point cap, and that means that you could expect to see some more intervention from the Bank of Japan. But in terms of their policy announcement this Friday, it's going to be Governor Kuroda's last. No changes expected. It's going to remain on hold. And with that in mind, let's go ahead and take a look at Friday's non-farm payrolls. Now, this is going to be in terms of the what is released is going to be Friday, March 10th. It's going to be at 5:30 p.m. our time, Dubai time. It's going to be out of the Bureau of Labor Statistics. These are going to be figures for February. Usually, it's released on the first Friday of every month for the previous month, and this month, of course, an exception. Being on the second Friday, it's going to be the number of workers excluding farm and other job classifications. And there's the unemployment rate you want to note. It's expected to remain low at 3.4%. That's a positive in the sense that from the Fed's point of view, they can go ahead and continue to battle inflation so long as unemployment remains low, because that gives them a margin. If they're saying to themselves, okay, once, if it goes up to 4.5% or 5%, then we got to start worrying. Well, right now it's at 3.4%. That means they can remain hawkish, and that's usually a negative when it comes to risk appetite if it remains low. You also have wage growth that you have to note in an era of rising prices. Expectations are month on month. We're looking at 0.3% growth, and the labor force participation, which pre-pandemic above 63%. As of late, remaining below those figures. And then what about the actual non-farm payroll reading? Well, in this case, it's been the story has been one of growth, but January was an absolute blowout. It completely defied the expectations, an increase of over 500,000. And the expectation for February is that we're going to get a lower reading. It's going to be an increase of 200,000, so more modest compared to January. But I think a lot of it's going to have to do with taking a look at revisions, because last time around that was what it was. We had a lot of revisions, changes in population control that resulted in the divergence between establishment and household surveys reducing. So those are the things that people are going to note, and they're going to be hoping that we're not going to get as many revisions. We can get just a straightforward number that isn't going to have a lot of revisions in it to give a better or clearer picture of what the U.S. labor market is really about. Because those that are optimistic about the U.S. economy, those that are optimistic about stock prices this year, they're holding on to the belief that the U.S. labor market is going to remain resilient, and that means that we're not going to be looking at a hard landing. We'll be looking at either maybe, for example, a slow session or even a rolling recession where you might have certain sectors suffering, but overall, that the economy is going to keep chugging along, and that's going to be a relative positive. And as always, as I mentioned, you want to note some of the other items leading up to Friday's non-farm payrolls. With that in mind, I want to thank you guys so much for watching, and happy ticks.